Rodrigo, welcome back again. Hello.
Hi, Mark. Thanks. How are you?
I'm good, thank you. We spoke earlier on, and you said, I asked you, what would you like the subject of our conversation to be? And you said, let's make it about the standoff between NATO and Russia and the correlation to the US dollar. So we're going to come to that in a minute. However, I think there's something that you need to say about your new fund. What is that?
Right. Yeah. Some good news. The fund was launched a week ago today, and it's operating now. The fund it's a very simple portfolio. Trades euro dollar only for daily liquidity. So we can do that with euro dollar spot. So it's
What
simple
is
and
the name of
easy.
the fund?
It's the AQA Sure Fund.
And where is that domiciled?
It's a domicile here in Malta.
Okay, perfect. All right, congratulations for that.
Thank you.
Now, talking about the standoff between Russia and NATO and the correlation to the US dollar, I didn't ask you at the time, but when you talk about the US dollar, presumably you mean the US dollar against a basket of currencies rather than against a particular currency?
Right, exactly. The question is, okay, the obvious consequence, if anything happens, let's say if Russia invades anywhere else beyond Ukraine, then it's an obvious case of dollar appreciating considerably against everything else, not just the euro, of course, but everything else, because safe haven will pull the dollar up against everything. But the question, the relevant bit is, what if that doesn't happen? But in the build up to it, there will be a lot of spending on military and a lot of defense increase spending. That's good for GDP. So Europe is catching up on that. That's a bun for the European economy. There's a significant catch up to be done. That's what Trump has been touted for years now. Has been complaining since he first came
Sure.
to power about the countries not spending enough on defense. And some countries try to go around it by forcing the square in the circle in terms of counting. For example, Germany counts payments for retired veterans as defense spending. So
Okay,
that's of course very gray area. So
let's not go there. Okay.
yeah, there's a lot of scaremongering going on in the world now about Russia. I think it's completely overblown. I think it's out of place. Russia is not. Russia wants compromise. There will be a solution, a peaceful, an ugly peaceful solution in Ukraine, which means they keep the Donbass, Donetsk, Luhansk, and Crimea, and get out of the rest. And but the lesson is there. The warning is the writing's on the wall. The defense spending needs to increase, and it will increase by a significant amount.
Okay.
But it's a very interesting point, Mark. Because people are very concerned about the impact of an outright invasion. People are very concerned about the military aspect of the outright aggressive physical impact of an invasion. But it should be much more concerning the level of sovereign debt in the West. Imagine Russia has a debt to GDP level of 17% only. It's
You mean
the
17, 17, 17.
1.7, yeah,
Yeah.
one of the lowest in the world.
Mm.
Whereas the U.S. now is going to 135%
Yeah.
level debt to
Yeah.
GDP this year.
Yeah. Yeah.
Japan is at almost 250 plus
Yeah.
percent. Japan is a separate case because of course their debt is internal, is pension related,
Mhm. Mhm.
and most of it is owned to the Japanese people itself, to
Mhm.
retired Japanese investors. But still, it's way too much, and that's the norm across the developed world, is across the West.
Yeah.
Italy is way above 150% of GDP.
Mm.
Uh, all countries is very concerning. Imagine the point of this is, remember, imagine when inflation peaked at 9% in
Yes.
the US in June 2022.
Mhm.
Imagine if it kept going to 10, 12, 15%. The same way it went from 0 to 9, it could have gone to 15, 20%. And so imagine if the Fed had to raise interest rates to try and curb that inflation from creeping up. And instead of interest rates having a ceiling at where it is now at 5.5, if it had gone to 10%, imagine the US debt now is at $35 trillion. So that means a 10% interest rates would have meant just a servicing cost of $3.5 trillion, even as is. Right now, it's what, 5.5% of 35
Agreed.
trillion.
I
That's
agree.
that's
On
nearly.
that point, I don't want to digress too much, but it's an interesting point you make. Are you trying to say that if inflation had kept going up and interest rates would have been forced up even higher, would that have been a negative on the dollar rather than a positive up to that point? Just quickly, huh?
It would have been a positive for the dollar if the Fed reacted aggressively, as they did belatedly, but they did. So if inflation keeps going and the Fed tackles it aggressively, then it's positive for the dollar up to some point, because then, and it depends also if it's just in the U.S. or if it's the reality elsewhere. If that's happening everywhere, high inflation, higher interest rates,
Mm-hmm.
then it's not, there's no contrast there.
Sure, sure.
But the point that the remember that there was an interview of Tucker Carlson that Putin gave, the long interview a few weeks ago, and he actually mentioned this. He mentioned the over indebtedness of the West countries as a whole, and the inflation going up. I can easily see the scene of Putin very happy about a higher inflation in the West,
Of
because that
course,
pushes interest rates up,
of
and
course.
that's very concerning. So
It
if
starts to
say,
squeeze the West. Yeah, that's true. Yeah.
yeah,
Mm,
yeah,
mm.
it's somewhat conspiracy theory type of mentality. But imagine if China and Russia gang together to try and push the commodities prices up, oil and metals and mining and agricultural products, and from a logistics angle also.
Mm.
So if inflation goes up in the world like it did on the onset of COVID because of the lockdowns, that's very troubling for this level of that in the West.
I agree.
It's
I
too
agree.
high. It needs to be
I
tackled.
agree.
The expectation, that the strategy of Western governments is that, okay, the wheel will grow bigger than the whole, so that
Yes.
stays at 35 trillion, let's say in the U.S., but
Yeah.
the GDP keeps growing from 21 trillion to, say, it's one day 50, and that dilutes the
Of course.
nominal debt.
Of course.
Hasn't happened in the last 50 years. It
I
has been
know.
the contrary in the last 50 years,
I know.
that has accelerated more
I know.
than the GDP.
I know. Okay, so coming back to the case in point, how does increased tensions between Vladimir Putin and NATO affect the US dollar? And is the effect immediately felt in the markets, and therefore trading the US dollar, is it really a market that's very jittery and reacts immediately to a geopolitical news event, which makes it very hard to trade?
Yeah, it's similar to it's an Ernest Hemingway style. It's all of a sudden, it's in two stages. All of a sudden, that in bits and pieces, very slowly, and then all of a sudden. The point being that geopolitical events very rarely impact the market because they're complicated. That they demand a lot of reading. It has nothing to do with numbers. It's politics. Usually, the market participants shun these things. It's anathema to market participants. But when geopolitical events come to fore, like the invasion of Ukraine was a great example of that. People weren't paying attention. They weren't believing that Russia would invade until 2 days prior. People were still saying it's not going to happen. And then when it did, it moves all of a sudden. Then it pushes. So to answer your question, it's um, it's tricky to trade FX, the dollar, especially in light of the geopolitical events, because it's there in the backstages in the background, and nobody's paying attention. The market's not paying attention to it until all of a sudden it comes to the fore, and then it's very complicated to try and understand, one, what's really happening, and second, what will be the market reaction to that, because it can be totally disconnected.
Well,
So
talking of which, President Macron of France made surprising announcement that people weren't expecting. That I understood it to say that he wasn't ruling out troops on the ground, NATO troops on the ground in Ukraine. People interpreted that as a way of encouraging the sending of NATO troops to Ukraine. I didn't see it that way, but however, people have interpreted it that way. What was the reaction, and how fast was the reaction in the markets to that announcement?
that's a very good example of the market not paying attention to geopolitical things until it does all of a sudden. From that comment, there was minimal, if any, reaction in the euro or the dollar, because it's not on the first level. people are really not paying attention to geopolitical headlines until they really materialize, and then it's a tsunami. And on a second level, even if they were in this particular case paying attention to, it's not. It's just a talk, a political talk. It's not going to happen. The people in the market who do pay attention to geopolitical aspects, quote unquote, know that it's not going to happen. NATO is not going to send troops to Ukraine. The Ukraine, unfortunately, the Ukraine subject is like the Syrian war a few years ago. It's slowly fading more and more gradually, and unfortunately, less and less from focus. So much so that the U.S. Congress now was hesitating in approving further spending to Ukraine, for support, financial support. And then Putin was very clear that that's a game changer. So there was a U.S. I think it was a U.S. House representative who said, those people who are against, who want the U.S. to send, who are very strong advocates of the U.S. sending help to Ukraine, would not even be able to pinpoint Ukraine on a world map.
Yeah.
So it's probably true. And the point being that it's already only financial support with an infinite printing machine is already being hard to justify and sustain after 2 years plus. Now, troops on the ground, it would be too extremely far-fetched, and it wouldn't be. So the Macron comment was understood by the very few who paid attention to it, that it's a non-event. It's just a
All
political
right.
talk.
Okay. President Medvedev, I think he was president, wasn't he?
He was, yeah.
Yes, he was. He was president, in fact. Yes, he
Yeah.
was for a short time. Well, for one term.
Right.
He had a presentation just after President Macron's comments, showing a map of his map of Europe, saying very definitely that Ukraine didn't exist and Ukraine was Russia. And in fact, that map showed Russia as being Transnistria, and I think even parts of Poland. I'm not sure if Slovakia, all of Slovakia was still there. How, if, for instance, the Russian troops managed to push towards Odessa and managed to start getting close to Transnistria, how would the market take that? What would happen to the dollar? And we've just got a couple of minutes left on this one.
That would be chaotic, because Transnistria is part of, officially, at least on paper, part of Moldova. And that would be chaotic. That would be a good example of the market. It's the same thing as the invasion of Ukraine. The market shunning and not believing anything like that. And then when it happens, it's all of a sudden. That would mean a significant depreciation in the euro and a significant appreciation of the dollar against everything, especially the euro and sterling.
Does that mean that any advances by Russian troops is going to be positive dollar?
Yes, to a certain level, not Kharkiv, not smaller strongholds and points of contention, but Odessa. Yes, if it gets to that longitude, then yes, then it would be dollar positive. And if they do, and keep in mind, it probably, in that case, in the case of Transnistria, it would probably be from within. Connecting a bridge from Russia to Transnistria would be difficult, expensive, and very to not only difficult to implement, but to sustain, because that would be very quickly cut off by Ukraine through the global support. But conversely, from within Transnistria, the same way it happened in Donetsk, in Lugansk, and the same way it happened elsewhere, then that's feasible and viable and easy. The local population probably wants, to some level, that's up for grabs. It's hard to tell. But if you walk around Tiraspol, people want to be part of Mother Russia. And so some separatist movement could begin. That would be dollar positive, because the market would interpret that as...
Yeah. I'm going to have to stop you there. Rodrigo, thank you very much. Congratulations on your fund. Speak to you next week. Bye-bye.
Thank you, Mark. Speak next week. Bye.